The stock has fallen roughly 50% from its recent peak. The fund house has been losing its market share from almost 1 year due to the underperformance of some of the key schemes. Currently, the AMC is under the new leadership of Mr. Navneet. He used to be the Chief Investment Officer in SBI Mutual Fund for 12 years, and under his leadership, SBI has done really well. We'll see what are the action plans from the management in order to arrest the sliding market share. Hello everyone, welcome to today's video. Today we are going to discuss AMC businesses, the road that is less traveled, at least India's perspective. There are about 40 plus companies, AMC companies in India, out of which 3 to 4 companies which are listed in stock exchange. We are going to do this in 3 parts. First we see the opportunities, and then we do the risk parts, and finally we'll see HDFC AMC in specific as to why the stock has fallen so much. When we speak about the opportunities, the first thing comes in is the low penetration of mutual fund in India as compared to any of the developed nations or developing countries. In India, the mutual funds AUM to GDP ratio is at only 12% against the world average of 63%. As for the finance ministry data, only 1.85 crore Indians have invested in the mutual fund, which is very less, and most of them are living in the cities. So as the mutual fund awareness reaches every part of the country beyond cities, more and more people will subscribe to the mutual fund, and these companies, AMC companies, will benefit from that. This is a low capex and high ROE business. See, they don't need any plant, equipments and machineries in their business, so they don't have to invest capital on a regular basis. So that enables them to generate more and more free cash flow, and that can be distributed to the investors in the form of dividends. And this is a high margin business because their operating expenses are very limited or fixed, like office administrations or employee salaries, etc. But the AUM or the asset under management is growing much faster than their expenses, so they are able to maintain a very good margin. Because of the increased usage of smartphones and availability of data, these AMC companies can reach their potential investors easily, and without the need of any physical distribution network, and this was not possible few years back. So this will again reduce their expenses. The process is very simple now. You can subscribe to any of the mutual funds sitting at your home and on the click of a button on your screen. We have seen the positives. Now we will see some of the risk associated with this industry. In this business, the companies are valued not just on the basis of AUM. The performance also matters. No matter how big the company is, if they are not able to, or demonstrate performance, there are always chances of, losing the market share to their peers. As the AUM size increases, the challenge for the fund house will also increases, as to they need to manage the risk of market fluctuations, and also at the same time they need to manage the returns for their investors. And another major concern is the drop in the expense ratio. The market regulators have some threshold on the expense ratios. So as the expense ratios reduced, the fund houses revenue will be reduced as they get less commission from the investors. These days, the ETFs are gaining tractions. These are passively managed funds, and they have a very less expense ratio, that is 0.05%. So, this will make the, asset managed companies AUM mix weaker, because, as the investors shift from equity oriented scheme to this passively managed schemes, the AMC's company's commission will be reduced, and that will have a great impact on their revenue. Lastly, there is increased competition in this space. There would be a new entrants like Zerodha and Bajaj Finservs. So fund houses performance is the only key to the success here. Now let's see the HDFC's case as to why the stock price has fallen. The main reason being the underperformance of their some of the key schemes in last 1.5 years as compared to the peers. As a result, they are constantly losing their market share from last 1 year. You can check the blue bars on the screen. Now, why these schemes did not perform? See, at HDFC AMC, Mr. Prashant Jain, who is heading the fund managers, has been largely a value investor. So we know that from 2019 to 21, mid of 21, this period was in the favor of growth stocks. Hence, these schemes underperformed the peers. As an investor, we must consider the performance of a fund across market cycles, not just the underperformance of a fund in a shorter period. Let's see the management's answer for a question that is thrown at them on the sliding market share. So this is a very long answer by Mr. Navneet, who is the MD and CEO of HDFC AMC. I will dissect this for you in 2 to 3 pointers. Number one, they have identified the problem and they are working towards to fill the gap in their product basket by tweaking their investment style a bit. And they are going to launch new products under international funds, focused funds, and sectorial funds. And they launch only those funds which they believe which has the long-term potentials. They want a balance between margin and the market share. Market share at any margin they would not be interested in, and this is rightly so, because if you check the operating margin of HDFC AMC with any other peers, you will get to know this. So they are giving very much importance to the margin. I am quite positive on the new leadership of Mr. Navneet, and I hope the fund will do good in the long term. Let's go to the chart and see. The stock has fallen roughly 50-55% from its recent peak and currently trading at its strong support zone. And I think, as per my view, the 2000 range would be a good buying point. Don't buy all at once. As per my view, 2000 level would be appropriate for adding 50% of the quantity, and then let price to form any chat patterns, probably a double bottom pattern to add remaining quantities. If the key level does not support the price, then you can add remaining quantity at the 1400 levels. I know this requires a lot of patience, but unfortunately this is the key requirement in the stock market. Finally, this is not a buy or sell recommendation. Please make your own research and act according to your conviction. Thank you for watching. And if you like the content, please press the like button and subscribe to my channel. I will see you in the next video.